Happy Monday out there, Team 42. It's your skipper here, Darius to present our macro minute for Monday, December 9th, 2024. Hope everyone had a wonderful weekend. So as always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, what will derail the year-end performance chase? Our answers are, while there are several catalysts this week that have the potential to disrupt bullish price momentum, we do not view lasting disruption as the base case for asset markets. For a trending risk-off market regime to develop, one or more of the following outcomes must come true. Number one, our 28-month-old resilient U.S. economy theme must be disproven by a preponderance of key economic data. Number two, incremental evidence of our 36-month-old sticky inflation theme must catalyze a change of heart at the Fed and truncate our 14-month-old Jay wants a soft landing theme. And or number three, the size, sequence, and scope of President Trump's policy agenda must evolve in a way that transforms our recently introduced triple S's theme from a potential bearish catalyst for asset markets to an actual bearish catalyst. Well, the macro and policy calendar this week is somewhat robust. We do not believe investors will learn enough bad news for one or more of those aforementioned scenarios to become true among the minds of investor consensus. Transitioning to our 42 macro dashboard here is always a wrap up with the question from our community. This one's regarding liquidity air pocket. Says, hi, Skipper. Thank you for the valuable content you produce. As a new subscriber, I'm finding the research, research and especially your insight very helpful. So thanks for the kind feedback. We appreciate you. Regarding the potential for a liquidity air pocket next year, what impact do you think that could have on the real economy and on treasury rates? So it's pretty simple. I mean, you're talking about so a global refinancing air pocket, you're talking about, the ex-ante yields on asset markets rising to create balance sheet space for a big refinancing fall. And so ultimately what that ultimately means is you have to have asset price valuations down. You need to have bond yields higher in the credit markets. And so that clearly would create some negative performance in asset markets. And it's our belief that the U.S. economy, being the top heavy K-shaped economy that it is, anything that causes negativity in asset markets that persists for an extended period of time is going to slow economic activity here in the U.S. economy and by extension, the global economy. So that's the kind of impact that it would likely have on the real economy. And with respect to treasury rates specifically, if we were in the pre-COVID slow inflation period, which sort of generally persisted post GFC, or if we were in this sort of persistent downtrending inflation regime, which has been in existence since the early 1980s, then you would expect to see that type of liquidity, a refinancing air pocket, cause lower bond yields. But in this sort of post-COVID regime, in which a lot of the fourth turning dynamics that we've been highlighting in our research have become increasingly true in an accelerating fashion, it's very likely that we have fiscal dominance create higher interest rates in any sort of refinancing air pocket. So it just really depends on where you are with respect to the inflation regime, the fiscal regime. If there's too much government or not enough government, you can make the case there wasn't enough government post GFC, which is why deflation was the primary risk among the minds of investors. Now, I would argue inflation is the primary risk among the minds of investors, as evidenced by the lack of inverse correlation in the bond market between the bond market and the stock market. We are in a different regime, and if you haven't paid attention to that, if you're not aware of that, this is me making you aware of that here. So we'll wrap it up there. Darius presenting our macro minute for Monday, December 9th, 2024. Everyone have a wonderful week. We'll catch you back here tomorrow. Cheers.